Guys, Derek Long here with Quest Trust Company. Thank you so much for joining us on another one of our famous $1 trillion mixers that we try to host about twice a month, right? We always want to make sure we have enough people that come through, get the good and proper education they need, whether it's on self-directed IRAs or anything else that's related in real estate. So we do our best to kind of go about these motions. So before I bring up our speaker, right, we're going to be talking a little bit about Quest, what we can do for you guys, and ultimately kind of what today's topic's going to be about. So once again, thank you for joining us. I always like to give a quick disclaimer. Remember, everything that we go over is for your educational purposes, all right? You need to do your own due diligence. You can go ahead and leverage the chat box and pitch your own investments if you'd like, but make sure you're doing your own due diligence on not only the people you work with, but just remember that Quest, we're only here because we only like to provide the education. We don't give tax, legal, or investment advice. So who is Quest? Always remember, right, we're the largest self-directed IRA company currently in Texas, right? We hope to be the largest in the US pretty soon, right? We're growing very fast. We have about 20,000 active clients at any point in time, right? A little over $2 billion now in assets, right around 100 employees, with 34 of those being certified IRA service professionals. If you guys don't know what a CISP license is, it's actually very difficult to get. It's a long course you have to take, and very few even CPAs have this type of license. So make sure you leverage our employees that do. Okay, we're highly educated in these areas. Most of our clients right now, they have a lot of notes and things paying off, right? That's why we have so much cash that's undirected. We have clients right now of $350 million just sitting, waiting and looking for their next investment, all right? As I always say, though, don't forget we're only here for education, okay? So we do our best to try to offer endless free amounts of education on several different platforms. We got YouTube, we got the Education Center, a happy hour that we try to start doing, right? We obviously have our weekly webinars that we do Tuesday, Wednesday, and Thursday. And then we even have ones like our self-directed Saturday event, right? So this Saturday, we're going to be doing another unique event like this. It starts right at noon Central Time. But man, check out each one of these platforms, okay? So I always like to say, too, if you guys would like to set up an IRA, if you want to get started, you need to leverage one of us, okay? If you already have an IRA, though, and you have a friend that wants to set up an account, did you know I'll pay you? I will physically give you free money to introduce your friend to me to set up an account. Remember, they can use their IRA and most likely invest into your investment. So introduce them to me. And if you already have an account, I'll give you a free $25. And we can rinse and repeat this as many times as you'd like. We have some unique events coming up as well in the summer. We're calling our Summer Intensive event, where we're bringing several speakers from across the US to talk about different topics. Tickets are only $25, so they're super, super cheap. Lastly, I want to talk about a toaster. I know that seems really weird, right? However, Quest, we realize that a lot of our clients are going to be of the older demographic, right? A lot of our clients are leveraging retirement accounts and they're saving up for retirement. And we look back at some of the old school infomercials or the old school banking commercials. It'd always be like, if you set up a checking account, we'll give you a free toaster, right? And it was kind of a joke thing, but we decided to take this approach. I kid you not. If you set up a self-directed IRA with me in the month of June, I will personally ship and mail you a free toaster, okay? So with that being said, I want to talk a little bit about our next speaker who's going to be up and coming. He's actually been a very good friend of mine. Me and him got to take a personal cruise together out to Cuba at one point. I've been to his Dealmaker event out in 2020, right before COVID really hit. And I've got to get to know this gentleman over about the last 4 to 5 years. If you would understand the network and the amount of investments this up-and-coming individual has done, it is unbelievable. He has helped more real estate investors get started, right? And just in general has a wealth of knowledge. So Jim, are you there with me?
Jim, yes, I am. How you
doing? Look at that.
All right.
So Jim, I'm going to totally let you take it away. If you have any questions, though, I'm going to be here to moderate the chat box, and I'm just going to kind of let you dive right on in.
All right. Well, here's the first hurdle tonight. I want everybody to figure out whose apartment am I hanging out in tonight.
That apartment looks pretty familiar.
What do you guys think, huh?
Whoever puts the proper apartment name in the chat box first, I will mail you a free toaster, whether you have an IRA or not. You got to put it in the chat box.
Learn to use that. Oh, there we go. There we go. We got it.
Ryan got it. I see Friends, but Friends wasn't right, but Ryan was definitely the first.
Mr. Prasad got it. Is that Ravi Prasad? I'm guessing.
Oh, Prasad. I saw Ryan. I'm sorry. Yeah, Prasad got it. You're right.
I think it's Ravi. Is that you, Ravi? Let me know. It's good to see you guys. Yes, Ryan Mellon got it. Michael Long. All right. So it's a lot of fun to hang out here in Seinfeld's apartment, isn't it? Let me tell you, Quest always brings the fun, whether it's an IRA fun cruise or whatever it is. Y'all are always in the fun for sure, Derek.
Thank you, Jim. Thank you.
So thanks for having me on, Derek. I know we've talked about this for several months, but here we are. So I'm glad we finally got it. And we're going to talk about a topic I love, which is real estate investing. I could talk all night about real estate investing. But specifically about apartments and some of the shifts and transitions between single family and apartments. Everyone's asking how I got that background. Well, you can Google your Zoom backgrounds and you can find one for your favorite little setting. I happen to love Seinfeld. I mean, I can just picture Kramer coming in right about now and having a good time, can't you?
Oh, that's
a lot of fun.
That is
so really let me do this. Now I want this to be super interactive, okay? So I'm gonna try to get the Q&A box and chat and all that as best as I can see it tonight as well. Because when I speak live, like in person, I like the interaction. And on Zoom, there's not as much interaction, but I want this to be interactive. So I want to hear from you guys. The first thing that I picked up tonight was when Derek said they have $2 billion, that's with a capital B, dollars invested. That is a lot of opportunity. And the number that really jumped out at me beyond the 2 billion with a B was 350 million. And that's 350 million what? Uninvested dollars. That's dollars sitting in Quest accounts that should be actively used, right? On a regular basis. The idea is to open an account and then grow the account tax-free forever. That's the beauty of a Roth IRA. So figure out if that's if some of us are part of that. You got to decide, what am I going to do to deploy my capital? Okay, I've got a little bit sitting at the moment myself, okay? So I understand it happens in between investments, but try to get it active as best you can. I want to talk about investing in smaller apartments tonight. Again, my name is Jim Ingersoll. Let me tell you a little bit about myself. I'm in Richmond, Virginia. I'm an active real estate entrepreneur. I invest both in Virginia, and then this year we also added in Florida. And we're investing up and down the I-4 corridors where we targeted specifically from like Orlando to Tampa, beautiful country. And I did that because I was following trends and a lot of population shifts and things like that happening. Also, some pretty good areas with price to rent ratios, which caught my attention. There's my email, there's my cell. I'm a good texter. I don't always love getting voicemail, but you can leave me one if you want. I'm happy to talk to you at any point. So Derek mentioned I've also do these annual deal maker events that are a lot of fun. And we had been doing them every year up until we hit COVID. I haven't done one since. So everybody's asking me when the next one is, still unscheduled. All right, so tonight I want to sort of zero in specifically on these areas. How to find the right opportunity and what is the right opportunity with regards to apartments. And I'll talk a little bit about single families versus apartments and my perspectives on that as well. I love both. I'm a bit of a real estate addict, so it's all good for me. We're going to talk about adding value, how to understand your cash flow and your equity positions, and really how to grow your cash flow, how to grow your equity. And then the most important thing for all of that $350 million of undirected accounts is learning how to use it. And by learning to use it, I'm really just talking about participating in deals and how you can do that and what kind of team you need. And I want to have like healthy discussions with you tonight on what holds you back. Is it finding the deal? Is it finding the right partners? Is it finding the right, building the right team? Not knowing where to look? What is it? What's the biggest obstacle that you have? Also, if you've had a recent win recently, we want to celebrate that. So feel free to type that in the chat as well. So why smaller apartments? You know, I've been investing now for 15 years full time, 15 years. I can't believe it. Before that, I was in corporate America, like most people. I did corporate America for way too long. I was backgrounds in electrical engineering and all that. Anyways, I jumped out of corporate America and I started buying single family homes and I loved it. I fell in love with single family homes. I love it. It was easy to do, no problems. But over the last couple of years, I've transitioned into really smaller apartments. And by smaller, I mean like duplexes, quads, and really up to like 20 units. But I've made offers all the way up to like 57 units. Just people don't always like my offers. So I find these smaller ones easier for me to manage as far as getting them. But, you know, as far as like the difference between like single family and apartments, one of the things I like about doing apartments is it's allowed me to like scale my rental portfolio a lot faster. So, man, I love my single families too. And Lord knows they've gone up a lot in the last couple of years, haven't they? But when you start doing apartments, instead of just doing one at a time, you can do 2 at a time, 4 at a time, 10 at a time, 20 at a time. And the difference in the amount of work isn't tremendous. It isn't that much more work. And I would say, you know, I'm working on I've got 26 apartments in Florida versus apartments right here in Virginia where I've got to do a massive rehab. The ones right here in Virginia that are massive rehabs are probably more work than the apartments I'm working on in Florida. So sometimes when you scale up a little bit and you have the right team helping you, you can actually find that it becomes a little bit easier in some other ways, okay? Just the numbers get bigger. Just don't get afraid of zeros. It's okay to add a zero to your investing. It's all right. So what I like to do is find stuff with fixable problems. And by fixable, I mean like a lot of times we're coming in and we're having to sort of redevelop. And one of the other reasons I really like smaller apartment complexes versus like I mentioned 57 units or 100 units or 200 units. Those types of apartment complexes are typically being bought up by people like the Kushner family and people like that who are willing to pay a whole lot more than I am. And those cap rates really get compressed. I mean, they'll come in and they'll pay like a 4 cap, hold it 3 or 4 years, and they will make probably millions of dollars selling it in 4 years. It's just a lot of risk when you come in at a super low compressed cap rate without having all that capital behind you, like some of these large institutions, funds, and things like that. So with like a duplex, a quad, maybe 8 units, 12 units, 20 units, you can get into those, and they're typically not already owned by institutions. They're owned by, you know, it might be owned by a doctor or it might be a mom and pop type landlord. And they get burned out and they get tired of it. They're trying to manage it on their own. So there's, I feel, more opportunity to buy these types of apartments at the right price. All right, so Pandu, I see your question about property management. Okay, I'm going to take this really quick because I think if you're going to invest outside of your area, like you're in Austin and you want to go to Waco, I don't know exactly how far apart that is, but if you're like in one area, like say on the West Coast, and you want to invest in Columbus, Ohio, for instance, that property manager is your number one asset. And I think the first person on your team when you invest outside of your area. It is absolutely critical. So do you go after the largest? Do you go after the biggest, the fastest growing? Who do you look for? I think it's good to find somebody who's already a real estate investor, but also has a management business. That's worked out really well for me. So that's my one tip on finding a property manager. I really think that is key. And then once you've got like that property manager, realtors, property managers are great networkers, excellent connectors. They can connect you to the contractors and the realtors and other people in that market that'll really help you a lot. putting the right property manager in place from the get-go is really important. I'm glad you asked that. So I do like to find fixable problems. I do like going after smaller apartment complexes rather than the huge ones, because I feel like they're easier to get. They're sort of like buying a duplex is very easy. Nobody should be afraid of buying a duplex or a quad. But however, if you're going to go out and you've never bought real estate or never invested in, you're going to go out and buy 60 apartments or 100 apartments on your own with no training and nothing, that would be a high risk proposition for you. But buying like smaller apartments is easier. It's a lot easier. So what I like to do, I'm just going to show you 3 case studies tonight. Is that okay? Just 3 case studies. And I think we can make the points that we have here. This first one is in Richmond. Anybody in Richmond would know the area over near Carytown and the Fan. This is on Hanover Avenue. And I bought it a few years ago. When I bought it, it looked like it did on the left. And when I finished it, it looked like it did on the right. Now, this is Class A location. This is a really great location, but it was Class D property. And that's one of the things I like. If I can find really good location, hey, real estate's all about location, isn't it? That's the truth. So if you can find a great location, because that dirt is important, it's as important as the structure, okay, the location of that dirt. So where it's at is important. If you can find a really good location in a poor condition, then that is a great way to go. So that's what I had found here. Let me tell you how I did it. Now, when I bought this, it was a pocket listing. A pocket listing is typically a realtor, in this case, working on an estate. The kids inherited the property, didn't want it, so they're going to sell it. But with a pocket listing, I bought tons and tons of pocket listings because I network continually. And we got it as a pocket listing. And instead of, it's difficult to sell like a quad that's in crappy condition and with tenants that don't want to cooperate, okay? That's the reason something like this becomes a pocket listing. With a pocket listing, a realtor finds out, they get the listing, but instead of posting it to the MLS, they'll exercise their own network and see if somebody wants to buy it, and then they'll just list it to the MLS and turn it pending at the same time, okay? And that happens a lot more times than you would realize, okay? So that was the case. It was a pocket listing. The realtor had been working with a family that inherited this quad. There's 4 apartments, 2 upstairs, 2 down. You kind of see the porches with the beautiful Christmas lights still on them, right? So when we bought this, it was $550. That's a lot of money for me on a quad. I don't like even spending that much money for 4 apartments, okay? And if I'd done underwriting on this, like people do underwriting on multifamily, I would have never bought it, because 3 of these 4 apartments were rented at like $600 a month, and the 4th one was vacant. So how much cash flow is that a month? $1,800 a month coming in against the $550 investment, plus it needed work. How in the world can you make that work? Well, if you don't like have the vision to understand how you can redevelop and how you can reposition this, you would never buy it and you would just miss this opportunity. And that's something I want everyone to understand is like any deal can be overanalyzed. You can analyze it in Excel and do all your checks and balances on your desk and your pen and your paper and your eraser and calculator, and you can overanalyze and knock out any deal and never do a deal. And that happens to way too many people. It happens to people with, especially with a math and science background like myself, being an engineer. Because as an engineer, what are we taught? Like control variables, send it through the equation and see, get the expected output. With real estate, sometimes you can't do that. You've got to have vision to understand like current state and future state is the way I think about it. Does that make sense to everybody? Let's see. All right, so that's what it looked like before. And go back one more here. And then when we were done, let me tell you about what we did. We had 3 tenants paying $600 a month on a $550 investment. Now, I don't know about you guys, but the way I like to kind of ballpark my cash flow to see if it's going to work or not is what I use is called the 1% rule. You guys heard of that? So with a 550 investment and say, whatever it took to put this in, say 75,000, I would ideally want it to cash flow at like 6,000 a month or $6,200 a month. If I'm in at 600, I want 6,000 a month, not $1,800 a month. So we had to work with the tenants that were living here and ask them to move. That's the first thing we did when we bought it is we asked them to move out. They were on a month-to-month lease or didn't even have a lease, if I remember right. And so I worked with them, I met them, talked to them, and slowly over 1 or 2 months, pretty quick, we got them to move out. Once they had moved out, then we were able to redevelop the property and change the condition the way that you're seeing there. That included, new heating and air, updated plumbing, better bathrooms, brand new kitchens, and all of that stuff. Okay, but we went from $600 a month of rent to $1,495 a month in rent. So we went from $1,800 a month when we bought it to $6,000 a month. Okay, that's what I meant about fixable problems. And sometimes you've got physical problems, like the asset is in horrible condition. That was the case with this one. Okay. Other times you've got properties that are just completely mismanaged and you have management problems. Like I looked at one just last week, it was 18 units and it was in Florida. And this property was in Winter Haven, Florida. It's an area I really like. And it was beautiful, it was good. You know what was the management problem they had? One of them, besides having rents 30% below market, he had 18 water meters on these 18 units, and he still paid the water for all the tenants. That total water bill for that landlord was $1,000 per month. Oh, Chris, that is awesome. I love it. You live there. That's great. So this 18 units in Winter Haven had 18 water meters, and the landlord was still continuing to pay the water. What does that do to his P&L, like his income statement? It's horrible, right? But is it a fixable problem? Well, they already have 18 water meters. It probably is fixable. You have to work with the tenants and let them know that, we're not the government. We're not going to pay for their water forever. And by the way, your rents are 30% low. That's just an example of what I mean by fixable problems. Now, this is some units I do own in Florida. This was 20 units. 20 apartments, and kind of looked like this on the left. See the palm tree. I love Florida, right? This was 20 apartments we paid $1 million for. And when we bought it in January, the average rent was around $685 a month. Now you guys are doing your quick math and you're saying 20 times almost 700, 14,000 a month. It's better than the 1% rule. Yeah, it is. So it's good cash flow to start. But that 685 is 30% low also. So is there opportunity, even though the cash flow is good on day one, if you want to add value, you can increase rents and increase it. Now, in this case, Derek, you talked about network and how important it is. I always say your network is your net worth. If you're not finding deals, or if you don't have enough funding for your deals, or whatever it is, you're not happy with your cash flow or equity, then you need to start challenging your network more often. So challenge your network, take that away. Anyways, this one was a motivated seller that came to me from a referral. And it came to me as a referral by somebody I know. But the reason he called me is because I was on Instagram, and I was posting some pictures of properties that we're working on that were apartments. And I posted something about looking for something in Florida. So he called me and said, "Hey, I saw your Instagram post. Are you interested in these 20 units? They're not listed with a broker. They're not on LoopNet. They're not on the MLS. They're not on Craigslist. Nowhere. It's just the guy needs to sell. And the reason he needs to sell is because he had a medical condition earlier in the year, and it was very, very serious, and he had to move very quickly. and had to sell. That's what a motivated seller is, somebody who has to sell. Now, believe me, I love to negotiate. I love negotiating. This guy would not budge below $1 million, even though I kept trying. So sometimes when you find a seller that won't budge on price, you can try to negotiate a little differently, and that's with terms. So I ultimately ended up giving him his full price because it was a good deal. That's $50,000 per apartment. Rented at an average of $685 a month. I had tons of fixable problems here too. We're still going through them. But so I gave him his full price, but in exchange for that, he gave me 12 months of seller financing. So keep in mind that even when you run into sellers that won't budge and you love negotiating like I do, you can still negotiate something other than price once in a while. You can negotiate your terms. Okay, so this is kind of what it's starting to look like over there. They're the same apartments. And we're repositioning them. We haven't done all 20 of them, but we've done maybe 6 of them or so, whatever it is. And as people move out of them, we're not asking people to move, but if they vacate, we start to do value add. Now, when I bought it, he was accumulating. He had two vacant, I think, when we bought it. And we told him not to fill them because I wanted them vacant, okay? So I could improve them. And so that's how we got our first 2. And then over the last few months, we've had 3 or 4 more move out. When they move out at the end of the lease, we come in, we do the value add, and then we increase rents. You can see the kitchen in the bottom left. We come through, we did brand new kitchens. We put granite countertops in, new appliances, all new ceramic tile, better bathrooms. And these things rent very, very easily. There's no issue in renting these. So we started out at $685 a month. We started re-renting the improved ones at $1,000 a month. And honestly, I'm thinking that $1,000 a month is a little bit low. I think we could actually increase it to maybe $1,100 on the new ones that are coming up. Because if you guys notice, like real estate's been going up a lot this year, along with everything else. I don't know if it's 100% inflation or what it is, but not just the price of real estate, rents are going up along with materials and food and everything else. So inflation is kicking in. So I don't know how high these will end up in the end. This is another one we did in Virginia. This one looked like it did on the right when I bought it. I remember this duplex because anybody on Zoom today had COVID. I had COVID in December, okay? I hope nobody had it because it's not fun. But anyways, at the end of 10 days, I was starting to feel better and I was anxious to get out of quarantine. Anybody been in quarantine and anxious to get out? So like on my 10th day of quarantine, I get a text message from a wholesaler who said he had this property on Edgewood in Northside and wondered if I'd be interested in buying it. He'd been trying to market it at $270 and nobody was buying it. And so anyways, my first day out of quarantine, I went over, I got the lockbox code and I went in. And it needed a whole lot of work, but I could see it had good bones and would be a good duplex if I could get it for the right price. He ended up discounting it down to like $230, I think. Oh, Jimmy, thank you for volunteering as a paramedic. My applause to you. Quarantine is not fun. So anyways, my first day out of quarantine, man, I was ready to do a deal. And this one kind of came across in early December. And I put it under contract and then closed probably the 1st of January. And when we were done, it went from that red albatross to really a nice duplex on the left. Does it look a lot better, you guys think? You guys think it looks better? What was cool about these is I've got a lot of 2-bedroom apartments, but I don't have a lot of 3 bedrooms. This is a really large duplex, okay? So it's like, I don't know, almost 3,000 square feet, maybe 12 to maybe 1,400 per apartment, something like that. It's pretty big. I didn't have many 3 bedrooms, and it was a good chance to add something a little bit different. It's one of the ways we diversify. And when you're all in real estate, like I'm not at all in the stock market or Bitcoin. All I've got is real estate. One of the ways you can diversify is different markets, different product mixes, different asset classes. Okay. So it was really a nice, large 3-bedroom apartment. The problem is it needed a ton of work, tons. Like you needed all new heating and air, needed new windows. And by the way, windows and all this building material stuff's gone up a lot. Needed like a full renovation. But again, it was in a really good location. Locations change over time. Like 5 or 10 years ago, this would not have been in a great location like it is now. When I went to this house, when I came out of quarantine, I said, what happened to this block? I've spent a lot of time on this block, but not recently. It really improved a lot. It's called gentrification, right? So things change. And if you can get in on the front end of that gentrification cycle and just hold property through it, you can do really, really well on appreciation and rent. So these, when we bought it, I think we paid like $235 for it or whatever it was, something like that. And we were all in around 300, sorry. So when I was doing my math in my head, I'm thinking, if I'm going to be all in at 300, then how much do I really need to rent these for to meet my goals? And I thought, well, if I can get $1,495 on each, or around $1,500, that's $3,000 a month on a $300,000 investment. The numbers should work out pretty well. And that's exactly what we did. I thought maybe I was going to have trouble renting these at $1,500 per apartment. No problem at all. It's easy. And all these examples I'm showing you, like the first one in that quad, and then this one also, the people renting these properties are typically like 30-something sort of millennials with excellent credit and a lot of income. Okay. So I'm like attracting people with good product that would typically be buying houses, but instead they want to be mobile and things like that, and they're renting instead. So there it is. So what were the problems? The problem here is crappy condition, right? Sometimes you have management issues, sometimes you have condition issues, but if you can find something that you can fix, then you're all say, hey, Will, in Virginia, I do my own property management. In Florida, I have a property manager. So I've got some of each. The other time I also use a property manager is when my IRA owns a house. If my IRA owns a house, I don't want to provide that service as a manager myself. So I think it's a good practice to have that property manager in there. My IRA does own some houses. So that's a really good question, Darren. That is awesome. Okay, I'm getting some good interaction. Christy, are you involved in Airbnb for any of your properties? Christy, I love Airbnb. How about you? What's cool about Airbnb is last year was a hard year for Airbnb because of COVID. Like all of our reservations started canceling like in April, May, June. But this year, the demand for at least the ones I'm involved with, like skyrocketed through the roof, right? Yeah, the cash flow is way higher. And like we're booked, our Airbnbs are like booked 28 days a month right now, and our prices are up a lot. Everything's up, right? Real estate prices, rent, Airbnb nights, all of it. So I do like to use Airbnb. They're saying, Quest is saying, be careful of that with your IRA. I don't own any Airbnb in my IRA. I'm talking about outside my IRA. Okay, so yeah, Chrissy, I do. I think it's a great model. I'm working on adding another Airbnb right now. So I do think they're good. And again, you're looking to create cash flow and you're looking to grow your equity. And there's ways to grow your equity, okay, by solving problems. So let's circle back, since we're a little after 8 o'clock, and talk about how can a self-directed IRA participate in assets in general, and how can they participate? What if you've got a small dollar IRA? Can you still be involved with rentals? The answer is yes. My IRA sold a rental this week that we've owned for 3 years. And and I didn't, and I'll talk about joint ventures in a minute. It was done on a joint venture. Okay, so let's talk about like 4 or 5 different ways that an IRA can participate. You know, Darren, I don't think the location on Airbnb is a huge problem. I think Airbnb is in higher demand than people realize in most areas.
I would definitely agree.
You think so as well? Like the perception, Derek, is like you've got to be on the beach, right? Or near some huge tourist thing. But the truth is, I mean, I've got them where they're not in those locations and they do pretty well.
I recently stayed someplace at a hotel, and my hotel at the end of 5 days was like $1,200. I was like,
Yes.
man, I could have found an Airbnb for the same price.
That's right. So yeah, I think you can do Airbnb in a lot of locations. And let me tell you, like Airbnb is like this sexy thing, right? Everyone loves it. Oops, did I just say that, Derek? Sorry. Anyways, Airbnb is a lot of work, guys. So if you've, I don't know how many people type in the chat if you've done them, okay? It's one thing to make the acquisition, and if it's turnkey and ready, that's great, no problem. But if you got to go out and you got to source the furniture, you got to get all of the silverware, you got to get the mattresses, the bed, the couch. Oh, it makes me tired thinking about it because I'm getting ready to do one right now. My wife is amazing at it. My daughter, Krissa, is even better at it because they're good at decorating and stuff, right? But I'm just saying, don't underestimate that expense or the amount of work that takes. And then once you've got it up and running, it's great. The cash flow is amazing. Like Christy said, it's fantastic. But it's a lot of work to manage your guests, to create a great experience and get a 5-star review, right? But there's some automation, like I'm using Smart B&B. I don't know if anybody's using that. That automated all of my messaging with my guests and put a big smile on my face. But I've still got to manage the cleaning crew. And when you got somebody checking out at 11 a.m. and somebody new coming in at 4 p.m., you got a 5-hour window to turn that bad boy around. You better hope there's no issues, right? Love it. It's a love-hate relationship, almost like social media. Love social media, but also hate it. All right. So now if you've got, if you're part of that $350 million of undirected cash sitting at Quest, you can go out and buy an apartment complex. You can go out and buy a duplex, a quad, 5 units, 10 units, wherever you want. This is a 10 unit, whatever you need. And you can your IRA can own it. Okay, now there's some rules. There's, prohibited transactions. Like I gave you the one tip, get a good property manager. Don't provide any services yourself. But if you've got the cash sitting in your account, you want to go out and buy something, consider doing that. Understand the rules and the risks and consider doing that. How else? You could also be a private money lender to somebody else in your market that has deal flow. And finding people that have deal flow when deal flow is tight is really important. That's why your network is so important. If your self-directed IRA accounts are not growing fast enough, you need to leverage and you need to really reach out and challenge your network. Here's a takeaway for everybody if you're up for it. Tomorrow, just start calling 2 or 3 people in your network that you haven't talked to recently and call them up and just ask them how they're doing, what they're doing this summer, how their family is. Don't talk about real estate or don't even talk about finances. Just call them up and be a friend. Build that network and take it a level deeper. So you could get into private money lending. I do loans. I like doing lending. It's very passive. It's mailbox money. When our monthly check comes into my PO box at the UPS store, I mean, it's pretty cool. I just take it to Wells Fargo and deposit it. It's pretty easy. And as with private money lending, it can be short term, like 6 months. It could be 12 months, or you could structure it differently and go long term if you want. You could debt finance as from the acquisition side, like if you're buying apartments or Airbnb, you might need help financing the entire purchase, or maybe sometimes you need help just with your down payment, like to bridge that gap, and you could lend in second position behind a bank. So there's all these different ways of doing it. Christy is looking for private money lending. Email her, closewithchristyfast@gmail.com. See, I like that, Christy. If Quincy was on with us, Derek, he would say it loud and proud, right? You've got to be able to mix it up. You got to be able to tell your story. Remember when I said about the apartments that I bought, the 20 units? That started with telling my story on Instagram. So if you want to attract success, start telling your story on a regular basis. Okay, Davis, we got to do lunch. All right, we're going to do it. So that's one way, private money lending. Okay, you can do the full thing, or you can find somebody that needs down payment assistance, and you could go into second position. All right, we okay on time here, Derek? 8:10. Okay. You could also joint venture. I mentioned earlier, my IRA sold a property this week that they had done a joint venture on it. This is good for both a small dollar IRA and a large dollar IRA. Say you've got a brand new account that's a health savings account that you're going to open today, and you're going to get that new toaster that Derek's going to send you, or you're going to do an educational savings account, okay? And you're going to start it with $6,000 or whatever. It's hard to go out and buy an apartment building for $6,000, or a house, or any kind of real estate, right? Even a lot. But what if you were to take that small dollar account, find a really good deal that it can buy, so you have access to the deal, but your account doesn't have enough money in it. What if you were to do an equity participation, cash flow sharing joint venture with somebody who's got part of that $350 million of undirected accounts? The deal flow comes together with the funding, and they do a joint venture. We sold one, I said this week. We did my joint venture partner and my Roth IRA also partnered up on that. Both accounts were Quest, by the way, Derek. So both accounts are doing well because we sold it this week, right? So it was good. It was like my Roth IRA had the deal, and then I didn't use any of the cash in my Roth IRA. Instead, I leveraged somebody else's. And we held that house for 3 or 4 years, actually almost 4 years to the date. Sold it this week. Closed today. Closing day is always the best day. All right, what else can you do? Oh, they should say joint. Well, real estate deals are like a giant Thanksgiving turkey. Don't you guys absolutely love Thanksgiving? I mean, you got all your friends around the table, that's networking in and of itself. And then just think of that giant juicy turkey, and all the stuffing and all that is as your real estate deal. And there's a lot of ways to slice it up. One of the things I love about real estate is the ability to be creative, and also to be able to participate with people that I love doing life with. And everybody walks away doing really well. So you can slice it up different ways. So what if you were looking at this one? Let's say these apartments here were $1 million. And the real estate investor would love to do this deal. How many people on the call on the Zoom tonight would love to do like $1 million real estate deal, but you don't have $1 million in your account? All right, it's okay. Raise your hand. Virtual high fives, all that. It's okay. You're in a good group. You should always learn to leverage. Learn to leverage other people's IRAs, other people's money, leverage other people's talents, leverage other people's networks, and so on, right? So let's say you're like a lot of people. You'd love to go out there and do $1 million real estate deal, whether it's in Airbnb or a ton of apartments or whatever. But the problem is, when you go to get a commercial loan for this, as a real estate investor, they're going to ask for probably 30% down. $300,000. So most real estate investors don't do 7-figure deals because the down payment is just too much money. The challenge is that down payment. It's also the renovation money and cash reserves, because when you start to do large apartment deals, larger ones, they want to make sure that you can cover your monthly payment, obviously, with the bank. But if you had the ability to leverage somebody else's account, IRA, for instance, with that 30% down, and had a way to properly secure them, Maybe you could do a joint venture. Maybe they could lend in second position with a preferred return. Maybe you could share the equity in these apartments when it's sold someday in the future. Maybe you could split up and slice up that real estate turkey in a way that made it worth their time for cash flow and equity both. So let's say that you were able to find a financial friend and they were willing to contribute $300,000 to your apartments. And because you're a very nice real estate investor, a good person, you're like, wow, if you'll do that, that'll enable me to lock up that property, create tremendous depreciation on my taxes, and I'm going to get, a lot of equity and cash flow growth in the future. Okay? And for that exchange, you're willing to provide them with a percentage of the net cash flow and net equity gain when it's sold later on. Okay? Maybe if you were willing to slice and dice it that way, you could do it. I love what John Rockefeller said here, Derek. It says, I would rather earn 1% off 100 people's efforts than 100% off my own. I really believe real estate is completely a team sport. Your team is critical. Your team is just an extension of your network. That's why I say your network is your net worth. If you can learn to participate in other people's deals and create deals that you're able to, and willing to share with your network, which regardless of which side of the table you're on, whether you've got the funding or if you've got the deal, you're going to be a lot further ahead. By the way, what about all that depreciation? It adds up. It's real, and getting any kind of gains tax-free, I know, is good with this group. Okay, I got to talk really quickly about due diligence because it's that important. Okay, and I really think that the due diligence falls into three areas. My last thing, Derek. First is the property. You've got to make sure you've got a good property. You got to understand what the fixable problems are, like we talked about, and understand cash flow, financing, and things like that. I think before you ever get into the HGTV design saga and get excited about ordering your dumpster, you should learn to use the financial calculator first, okay? Number two is your people. The quality of your network is what's going to make all the difference. Jim Rohn was right when he said you become the average of the 5 people you hang out with. And it's really, really important. And if you can find people with extremely high integrity, with great character, who are willing to do the right thing even when nobody's watching, then those are people that you want in your network. And the third thing is your paperwork. You got to make sure it's done right. And I know Quest does a great job making sure and doing that. Grant, you're funny. And the paperwork is absolutely critical as well. So if you want to download this, go to my website, investingnowNetwork.com/JV. I'll give you a joint venture agreement because we talked a little bit about that. But the due diligence, I wrote a checklist. It's very simple, very easy to digest. And if you're going to invest your IRA or your funds in anything, I would highly recommend you get that due diligence checklist. Derek, you know the reason I put it together. And that's it, guys. There's my contact. Take it away, Derek.
Awesome, Jim. So I love this. I had a couple of questions that popped up. I know you're going through the chat box. Did you see the Q&A box by chance?
No, I don't see the Q&A box, but I can get it.
Yeah.
Whew, there it is.
Boom.
Okay, we got 5 of them open. All right, anonymous attendees. Got it.
Awesome. So I'm going to let you kind of tackle those real quick.
Okay.
And I actually have some of my personal questions maybe you and I can go over as well.
All right. So the first one is Grant Davis. Hey, Grant. All right. Next one is when I find a fourplex, the price is so high, I cannot make it cash flow once property management is added in. How do you work this type of deal? Well, the only thing I'm going to challenge you on is really understanding what the market rent is. Not like the rent as it is today, but like what is that market rent going to be going forward? Because I'm looking at apartment deals every day, and 90% of them I can't get to work either. Okay, but that 10% is in the right ballpark and deserves a closer look. And when I'm looking at that, I'm trying to figure out like what is the rent today? Why is it 30% low, or why is it 20% low? Typically 3 reasons: poor management. Number 2, legacy tenants that have been there 20 years and they just never raised the rent. Don't do that to your tenants, guys. It's not right. Because what happens is if you're a landlord and you never raise the rent, you're being a nice person, but you're setting that person up for failure later in life when they can't move. Okay, because their budget never increased with market. And then number 3 is the condition of the property. So if you look at those 3 things, like, do you have legacy tenants? Do you just have poor management, or do you have poor property condition? And then really understand what you can get. Now, where do you get rental comps, right? We haven't really talked about that, but rentometer.com is one of the ones I like to use. And they're going up. I'll give you an example. Like 18 months ago, I rented a 1-bedroom in Richmond for $1045. It was a nice apartment, okay? $1045 a month. I had the tenant move out like a month or 2 ago. I re-rented it at $1245, the exact same apartment. And I'm telling you, like 18 months ago, I'm convinced I wasn't low. It's just gone up 20% in 18 months, okay? So really push yourself hard on understanding how high those rents can go. I like the 1% rule, and minimum 1% rule, for a lot of reasons. It gets me into the right ballpark. It allows me to quickly disqualify stuff. If I can't get there, I'm probably not going to look too deep, unless I've got a really large down payment. Okay, and if you're having trouble finding stuff at the 1% rule, I'll challenge you to look at some other markets, okay? There are great cash flowing markets throughout Ohio and Oklahoma and different markets, okay? So don't be afraid to get outside of your market. If you're like on the West Coast and you can't cash flow, or if you're in a high-end market, you can't cash flow, then you may need to look somewhere else or partner with somebody else. Let's see, is the reason the seller will finance is because they have equity in the property and they'll get yes, it is. It is part of it. They owned this property free and clear. They owned it for about 15 years. Makes it a lot. He had one loan on one of the buildings, and I gave him enough down payment to pay that off. Okay. And so, yeah, that is part of the reason. And the other reason he wanted to do seller financing is because he got his price, right? We gave him his full price. He wouldn't budge on that price at all. I'd love to negotiate, but he just wouldn't go. Now, if you need that JV agreement, you've got the link to get it. I would really recommend it, that in the due diligence. Let's see, I understand a self-directed IRA is tax-free investing. Do you get the same tax advantages annually as you would if you don't use your Roth IRA? Well, here's the thing. Derek, if you want me to take this, I will.
I was going to answer it probably differently than you, I think. So I'll let you start, and I'm going to probably.
Right. Here's the thing. Like, if you're investing, I invest both in my IRAs and outside my IRAs. Believe me, I'm a very active self-directed IRA investor. Derek knows that because he sees some of my activity.
Jeff, you probably have like 10 accounts with me between you.
I do. I have a bunch. Everyone should have at least a dozen Quest accounts. It's confusing, but it works. Anyways, and I also invest outside my IRA. So I have some buckets that are tax-free forever, and I have some that are not tax-free forever. And like the depreciation I accumulate really drives down my adjusted gross income every year tremendously on my stuff that's not in Roth IRAs. But what happens when I go to sell apartments and I have, say, a $300,000 or $400,000 capital gain? Not only that, but they're talking about getting rid of the 1031, and you got to recapture all that depreciation. Again, I'm not a CPA. I can't give legal and tax advice or investment advice, but those are things to be aware of. Whereas if I do that in my IRA, those gains and all that cash flow go tax-free forever and ever, all the way to the next generation, right, Derek?
That's correct. Well, so one thing I like to always say, because I get this question a lot. One of the most common questions I get is like, well, I found this great deal. Do I do it in my IRA or outside of my IRA? And I go, does it matter? Okay, I always try to explain to people that there's not one that's necessarily better than the other. They both have advantages and disadvantages. Prime example is things that I've seen you personally do, Jim, is I've seen you do some single family homes, right, that you've talked about and you make money on, but you do it today, right? It makes you money today. But does that mean you don't do a deal in your IRA? Absolutely not. So when you find that deal at that point in time, where is your money? If you tell me your money's sitting in your retirement account, do it in the retirement account. If you tell me you have that money sitting in your checking account, you can do it in your checking account, right? They both have those advantages. Now, some of the tax advantages outside of, we get it that it grows tax free. It's one of the number one things we talk about. But depending on how the deal is structured, you can sometimes get additional tax advantages that people don't even realize. Things from, let's say I brought on a form of UDFI, right, or UBIT, right? Many times, if I'm going to invest with someone like you, Jim, right, I'm going to take my IRA. Let's say that you're going to raise some capital from me, and it's not through a note. I'm just going to do an investment. I can actually claim the depreciation to offset any of the UBIT or UDFI, and it's something that a lot of times people miss. So I don't think that one way is better than the other. They're just different,
Yeah, and I look back at that deal with seller financing, Derek, and like if I had negotiated longer term seller financing, like say 3 years, I could have done that in my IRA.
Yeah.
I didn't tell you guys how large my down payment was. It was quite a bit of money, but if I had enough to do the down payment and the rehab, and if I had long enough seller financing, I would have had UBIT, right? But that depreciation is tremendous. It would have wiped it out. And then without even doing a 1031 someday, all that gain would have gone to my IRA. It was highly leveraged, okay, with seller financing. So there's a lot of ways to slice and dice. I look back at that one, Derek, sometimes, and I'm like, maybe I should have, but I only had 12 months. I had like a short window. Yeah. So I think I've been able to get like 3 years or 4 years. I may have done it.
Jim, one of the things I wanted to ask you, right, is I've seen behind the scenes some of the things that you've been involved in, right? Whether it's we're talking about being in Virginia, your Deal Makers conference that you were able to host pre-COVID, and some of the other things I've seen and networked with a lot of the people that you've worked with. So will you allow people, like I see that's your number, is that really your cell number? Can I truly reach out to Jim?
That really is. I mean, you and I texted today, Derek. So when you texted me, that really, I don't normally give it out. Honestly, I'm really careful. I'm good at texting everybody. I'm not always great about voicemail, but your network's important. And in this $1 trillion mixer, it's a great opportunity for people. You guys all should be chatting to each other, giving your contact information. Right now, type in the chat, where are you at? What do you do? What do you need? Okay, because everything for every single person, 76 people on right now, right, Derek? And we had well over 200 registered. Everything everybody needs to be successful is in the room right now. So if you're not networking and telling people what you do, where you're at, and what you need, and then give something in return, tell people what book you're reading, whatever, ask people what book you're reading, network, guys. You can network virtually on Zoom. Believe me, you can. Put your information in there, tell people what you do and how you do it, and then go from there.
There you go. See, like now it's blowing up. Look at that.
I know. Thank you. It isn't hard. I mean, we're hanging out here in Seinfeld's apartment.
My fiance came in the room when you started. She's like, "Is he in Jerry's apartment?" So she didn't say Seinfeld. She just said, "Is he in Jerry's apartment?"
Hello, Newman.
I love it. Jim, you've been a good friend of mine. I appreciate you coming on. Hey guys, I still see a lot of other questions coming in. Please email Jim directly. He will get back with you. He's been really good about coming on. Understand that most of the time we bring in people, and I think they get to a point where they no longer are active investors, right? And we've all known those people, right? But that's not you. You have been an active investor since day one, and you're always still doing deals. And I love following you on Facebook. I love going through the motions with you. And I just want to thank you for coming on and working at our $1 trillion mixer, Jim. I can't wait.
This is a great opportunity for people that you guys provide. And I love the way that like when I first signed in and I had Seinfeld's apartment, that was from my inner circle group last week, and we do it to be fun. And I'm like, oh my God, OMG, I can't believe I have Seinfeld up. And you're like, leave it. Yeah. You guys always want to have fun. I love it.
So Jim, any last minute words or anything like that before we kind of close out everything?
No, but Dave Almas, Sanibel is one of my favorite areas. I love it down there. No, it's really just build your network. Your network is your net worth. don't think you need a giant network. You need a quality network. Fewer better sometimes is good. And get good at telling your story in social media. That's why I said I've got a love-hate relationship with it, believe me. But it's a great way to tell your story. And when you're investing with your self-directed IRA and you hit a win, tell your story and tag Quest. They'd love to hear it. I'm sure of that.
Absolutely, I would. So don't forget, guys, if you want to set up an IRA, reach out to us. Let us know. I'll give you a free toaster. You know, it's great. And I think that's it. I think we're going to go ahead and close it out, Jim. So thank you again. I do appreciate it. And then one little final goodbye. I love it.
All right. Thanks, everybody. And let's do it again, Derek. I had a lot of fun.
Absolutely. So I'm going to leave the chat box for one more second, guys. I see Pete put something. Look.
Yeah, and guys, did you know you can save your chat box? There's three little dots. There's three little dots next to it, right? Mm-hmm. I know, because I do Inner Circle with my group every Wednesday at noon on Zoom. Well, Derek, you've been on. And, you can, hey, Sherry. So you can save it, okay? There's three little dots. Right-click it, if I remember right.
Yep. You click Save Chat.
Do that.
Yeah, boom. And that's it.
Yeah, there it is, three little dots. All right, yeah, make sure you save it, and then you can reach out to people again later.
Awesome. Well, thanks, Jim. We're closing everything out. I'll talk to you soon, okay?
All right, see you guys later.
Bye, guys.